and then that translates into sound money, just because it stopped or slowed down the decay towards socialism and a lot of bad thought patterns that were in the Democratic administration, the Democratic alternative. So on balance, it's a big positive, I think, for the United States. As regards sound money and how it impacts it, I think it's generally speaking a net positive. And we'll talk about the Treasury Sec pick in a minute, but there are those who say it's not positive for sound money because they basically want to, part of the sound money thesis, as we all know, is that the government's out of control and they're going to spend a ton of money and they're going to print to spend. And so one could argue that, by letting the Democrats ruin the country, and spend like they have been spending, that would be better for the sound money thesis. And that may be true, but my view is actually that almost either side, there's only so much either side can do. And, I'm sure you're aware over there in Europe, there's the big talk has been about this Doge committee, the Department of Government Efficiency, that Elon and Vivek Ramaswamy are talking about. And there's, they're hyping the notion that they can cut $2 trillion as long as the economy's humming and people have jobs. My sense is people are going to be they're going to tolerate it. At least I hope that's the case, because really that's the only alternative they have other than doing kind of a global reset. And I don't think, they or the population are ready for that yet. They could be, but I don't think they are. So, my sense is what they've got to do is, they've got to stop spending money on wasteful things and on regulation and on, the Inflation Reduction Act, and spend it on things that add to our infrastructure and grow American industry. The other thing, he hasn't talked about it much, and he said he's a strong dollar guy, but I don't believe it. I actually think that a part of the action with the threatened tariffs, et cetera, is that they want to decrease the value of the dollar, try and make U.S. goods more competitive worldwide, and try and make it, try and slow down the trade deficits, which have been kind of continually growing. So, my sense is that they're going to basically change. A lot is going to change with this administration. And one could argue, I was talking about this in another podcast recently, and this is why, by the way, the gold stocks trade so poorly. There's still a lot of consensus or belief that this 25, 26, 27 is just kind of a one-time thing, and it's not going to stay there. And I think most of the banks and a lot of the analysts are projecting gold prices 5 years out of 2050, 2100, 1900, 1800. I mean, I think the mean was like 2050. And so, I guess the central banks probably are thinking in the same way, which is, well, if it's at 2500, 26, a little too expensive, let's wait until it comes back in. My view is it's not going to come back in. My view is that we've got a key fundamental shift going on here as a result of, the realization that these countries are in fiscal dominance. And so what gold does, as you and I both know, is it's very good at smelling out or teasing out future monetary debasement. So even though right now the central banks don't have the money printer on full speed, gold knows that they're going to have to turn it on. And that's why gold is trading the way it's trading. And so my projection 3-5 years out on gold is in everything else. It's been hard. I mean, we've had, 3 years of sideways to down action, after the big burst coming out of COVID, but you can just see it coming. I mean, the monetary debasement is coming quick, in my view.
Yeah. Larry, I have a question for you. Maybe you can help me answer it. Back in March 2022, when the Fed started raising rates, sentiment completely disappeared in the junior mining space.
Oh, yeah.
September 18th, the Fed cut rates, and all of a sudden, there's euphoria back in this space. So what I'm trying to understand is the correlation between the Fed and the Fed funds rate, obviously, and the junior miners. Like, I'm really trying to understand that, because the miners did not react at all to 2,700 gold, like maybe a few percentage points here and there, but not as much. Especially sentiment amongst the executive, the C-suite, has changed tremendously. Can you maybe you have an explanation for me?
Well, no, it's just people tend to be backward looking in their looking at investment situations, and the markets tend to be forced down to prevent the U.S. federal government interest expense from being too large, because that drives the deficits, which it's a doom loop, right? More higher cost, bigger deficits, sell more debt, same size market, interest rates go up, bigger deficit, blah, 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 rinse, wash, repeat. So the Fed's kind of trapped, in my opinion, and they probably will cut, and after that, I don't know what they'll do. I mean, because I think inflation is going to start to come back. They'll probably continue cutting. I don't know. There's a conspiracy side of me that says, well, maybe what they'll do is they'll actually get tough and try to, prevent inflation, try to raise rates again, knowing that when they do that, the stock market bubble will burst, and knowing that a true bursting of the stock market bubble will give them the cover they need to go back to QE and ZERP and ultimately yield curve control. Because my view is that they are trapped, and they're, on one side is massive deflation, and on the other side is massive inflation. And they've managed to walk down this thin line for a while now, but they're going to get shoved off the line pretty soon. And when that happens, the big, and you can possess it and so forth, so on and so forth. And so, it's what I call analog sound money. Bitcoin, quickly speaking, is digital sound money. It's what happened with Bitcoin is they invented the concept of digital scarcity. If you think about things which are digital, like CDs and music and movies and phone call, anything digital, a file with a typewritten file, anything digital can be copied a million times. So there's no scarcity in digital land. It's very easy to hit a button and print. I mean, digital dollars, right? Fiat. I mean, they just hit a button and they got more fiat. What Bitcoin did was they solved the problem of creating something where they created digital scarcity. And so they've got an algorithm and a system. It's distributed 20,000 nodes around the world, a bunch of miners who process the transactions, where there's legitimate digital scarcity. There will only be 21 million Bitcoins ever. That's the system, and it's hard-coded. And changing it's almost virtually impossible now at this stage in its life. So what you've got is a digital form of something that'll last low, but it comes down quite a bit. So my view is what's probably going to happen on this cycle, based on prior cycles and percentages and everything else, is we started this cycle at about 50,000. I think we'll probably run up to about 200,000 sometime the next year or two. And then everyone will be levered up and talking about how Bitcoin's going to gazillions of dollars and overexcited, all that other stuff. And then it'll correct and it'll come from 200 back to 100. And that'll be a good time to buy it again. And then the next cycle, the last cycle low was after Sam Bankman-Fried. It was at 15. I was buying it there. I'm really glad I did. It's at 90 something now. Bought it at 15. So this pattern, I think, will continue to present itself. The drawdowns are becoming slightly lower with each cycle. Doesn't draw down quite as much. So the volatility is decreasing over time as more and more people understand it. I don't know if it's happened in Europe, but in the United States, a big deal over here is that the ETFs, when I was trying to tell friends about it, one of their first concerns was, well, Larry, that's not going to work. The government's going to ban this thing. They're going to realize it's a threat to fiat currency. They're not going to let you keep it. And that could still occur at some point in the future if we had a Democratic government, a Democratic administration. But when the U.S. approved the ETFs, that was
no.
I'm very much a Bitcoin maximalist, and I'm very negative on the other cryptocurrencies, mainly because they don't have proof of work and their monetary policies change. I mean, the thing that Bitcoin did was it created digital scarcity, secure digital scarcity, which is immutable. It can't be changed. And that's a big deal. No other crypto really has that, and certainly no other crypto has that with the same network size. I mean, when I was at the show, this gold show this past weekend, Peter Schiff said, well, you can't touch it, feel it, use it for anything else. He's right. I mean, it's a ledger entry. It's an immutable ledger entry. But I think money is a ledger, not, you don't have to be able to make it bounce off a table like a gold coin. So that's one of the negatives. The other negative he pointed out, he said, well, you could start up another one. There are a gazillion cryptos, and who's to say that, crypto number ABC doesn't come in and be better than Bitcoin? And to that I would say, well, okay, I get it. In the early days, that was certainly a risk, but you'd have to have some characteristics that made it, quote unquote, better than Bitcoin. I heard a couple of the older people in the front row scoffing like that's ridiculous. And but I don't think they're necessarily thinking through, the implications. I'm sure. I mean, I bought Microsoft. It's split adjusted now. It's 6 cents a share, and now it's at 400. I mean, it's when you get a network, when you get something that has, or Google was up, 2,000% from its IPO price. When you get something that is a leading network thing, it can become extremely valuable. It's kind of a different paradigm. And, I mean, think about in the history of investing, there aren't that many things that have returned more than 100 times your money. And yet the three biggest networking businesses have all returned thousands of times your money in under 20 years. I'm referring to Amazon, Google, and Facebook, And so here we've got a monetary network business with a limited supply, and all those could issue stock. They didn't because they had positive cash, convert people to big gold holders. I basically said, hey, open up your mind. A lot of gold people are, they're angry because they had it right. They've got the macroeconomics right. They got the Austrian theory right, and they hate this new thing. They see a lot of fraudsters. They see a lot of promotion. They see a lot of bullshit, and that just rubs them the wrong way. I get it. I completely get it. But look beyond all that and just factually look at what it is. And I would think that based on that, and based on the performance, based on the asymmetry, you might want to get some, and how much some is, well, that's everybody makes their own choice, but I've said to clients, the only wrong choice in Bitcoin, only wrong allocation in Bitcoin is zero. And get something, because if you do zero and it goes up 100x, you're going to have regret. I mean, I've noticed, I've been investing for 40 plus years, and I've got regret about certain things I missed and certain things I didn't do. And so, but everybody's got 100 chips to make a bet with. So, if you think something might really work and it looks attractive, fine, take 2 chips and put 2% into it. If you're wrong, you lose 2%.